Hi, my name is Professor Deanna Martin, and today we're going to talk about the first 3 steps in the accounting cycle, which are called the recording process. Then we're going to add a 4th step down here when we create a trial balance. We already did a whole video on Analyze, so if you haven't watched that, please go back and watch that. I'm going to rewrite that in here just so you can have this all in one place. Here's a summary of the Analyze process. Basic analysis, we had to remember the accounts, the amounts, and the increases and the decreases. Every time we read a transaction, that's the thinking part. We want to check in with the equation. The equation analysis is make sure the left side equals the right side. Then we looked at debit and credit analysis. We interpreted each plus and minus into is it a debit or a credit, ensuring that debits equal credits. Now we're ready to, after the thinking, write this or type this into a journal. The verb is journalize into the noun journal by creating a journal entry, another noun. The journal entry setup will be set up for you. You just need to fill in the columns. The first column will be a date column that will be given to you. The next column, you'll type in the account, and in the real world, we also put in an explanation, and then debit and credit. The first transaction was on August 1st. The owner invested $4,000 into the business. So the given date we would put here, usually a drop down. And then we already thought through this process of what are the accounts, what are the amounts, what's the debit, what's the credit. We determined that in process that cash and owner's capital are the accounts. Cash is going to increase. Owner's capital is also going to increase. When we go down here, cash is the debit right here and owner's capital is the credit. There's the increases right there. So we're going to debit cash, credit owner's capital. The debited account is going to go first. You're going to start typing in cash. It's going to pop up. As soon as you type in C, every account that starts with C is going to pop up. Just click on cash. You can type in cash, which is easy to spell, but on some other items that are, maybe you forget that supplies has 2 P's in it, something like that. If you misspell it, you're going to get it wrong for a dumb reason. So just be sure to click on it. It will automatically populate as soon as you start typing. We were given the amount in this one was $4,000, and I'm going to type that into the debit column. You do not have to include the comma, but I recommend putting the comma in there, because then you'll not mess up how many zeros you have in there and accidentally put in 400. The second account we're going to put in is the credited account. We determined it was owner's capital. I'm abbreviating. You can't do that when you put it in the system. OC stands for owner's capital. That's going to be typed into the credit column. Notice these are blank. Don't type anything into those ones. So owner's capital is the credited account. Now I wrote this with a little indent. Don't you do that. The system will automatically do that. As soon as you type a number in here, the system goes, oh, this is a credit account. Let me indent that for you. So don't do space, 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 start typing owner's capital. Another reason you want to start typing it, OWN, you'll see owner's capital pop up. You don't know where the apostrophe goes, so don't worry about it. Just click on the account. So the description on this one, I'm just going to make up something. Don't worry about this one. I'll say owner invested cash. The second transaction was on August 4th. We the company purchased supplies, and it was not on account. It said cash, and the date was given as August 4th. So my second journal entry, August 4th, when we thought through the process, we already determined the 2 accounts are supplies and cash. The supplies is an asset and the cash is an asset. Which one's debited, which one's credited? Well, we already determined that cash is going to go down. So that's going to be the credited account. I'm just going to leave some space up there and I'm going to type in cash because I always like to get that one out of the way. The given amount in that one was $600. The supplies account will be debited. So we're going to record that first. Cash is going to be second. This will be indented automatically. You need to type in 600 here, 600 here, leave these ones blank. And my description, I'll say purchase supplies. You don't need to worry about this descriptions because there's 100 different ways to write that, so it can't be graded, so you can omit those. Our third transaction was given date of August 16th. The third transaction was a customer purchases some services for us in the amount of $2,200. So I'm going to think about the accounts, the amounts, and the analysis. We already determined that it was cash and service revenue. Cash goes up, so that's right here, that's our debit, and service revenue also goes up, that's our credit. So cash is first because the debited account goes first, and the given amount was $2,200. And I'm abbreviating service revenue, and I'm going to say customer purchased services. Lots of abbreviations. Our last transaction was that we needed to pay our employees, and that pay date happened to be August 27th, also given to us. The given amount was $800. So I'm going to go ahead and look for the drop-down date of August 27th. We did the thinking part and already determined that salaries and expense and cash were our 2 accounts. Cash is going down, so that's going to be the credit. Salaries and wages expense is going up, that's going to be the debit. So salaries and wages expense gets recorded first. Salaries and wages expense, and the amount was $800. And then cash is recorded as a credit for $800. And my description, I'll just put in here, paid salaries and wages. So there's our 4 transactions. We've now journalized those.